Petty cash is used in a company so that you can have cash handy so that if someone needs to go and buy something of insignificant amount of cash, they will have cash to do that so that they don't have to get a company check or use a company credit card or anything like that. In a company, it could be a cash drawer. It could just be an envelope in a drawer. It's just a set amount of cash. So when you set up the petty cash fund, you're going to remove cash out of your bank account and put it into cash dollars. The journal entry to do this would be a debit to petty cash, which is an asset account, and a credit to cash, which is also an asset account. So you're just transferring cash from one account to another. Okay, so let's make up a dollar amount for this one. Let's say you want a petty cash amount of $500. Now, once you set up that petty cash account, you're not going to make another journal entry again until you're ready to replenish that amount at the end of the period, or how often you decide to do that. So what happens is each time an employee takes money out of the petty cash account, they're going to take the cash, they're going to go buy something. For example, they could go to buy cash or donuts or pizza or something for an office party, and they're going to replace the money with a receipt that shows how much money was spent along with the change. At the end of the period, you will count the amount of cash in the petty cash account, decide how much you need to replenish it to get it back up to $500, and take that money out of your regular cash account and replenish the fund. So let's look at how we would do that. Let's say we go and look and count and see that we have $300 left. Okay, so no matter what the receipts say, if we have $300 left, we're going to have to put $200 in the petty cash fund to replenish it back to $500. So I've typed up here that we have $300 left and we're going to replenish $200. Now we're going to look at the receipts. Now the receipts should show that total $200, but sometimes people forget to bring the receipts back, or they forget to put the change back in the drawer. So we need to add up the receipts. Now, when we add the receipts up, as long as the difference is immaterial or insignificant, we're going to put the difference in an account titled Cash Short and Over. Now, if it becomes significant, we need to look at the controls of the company and just make sure that someone's not taking cash out of the petty cash drawer. Let's say that we have a receipt for office supplies for $100 and gas for $25 and meals and entertainment for $76. So to record these expenses in the general journal, we would debit office supplies for $100 because we bought supplies. We would debit fuel expense for $25, and we would also debit meals and entertainment expense for $76. All right, do you remember how much we said we needed to take out of the cash account in order to replenish the petty cash? Remember, we said $200 would replenish it to $500, so we need to credit cash for $200. But right now, if you add your debits up, they equal 201, and our credits equal 200. So our debits do not equal our credits. So in order to balance, we need to credit cash short and over for $1. Now our total debits equal our total credits. Now, if we would have had the opposite situation, we may need a debit to cash short and over. Whichever side you need it to balance, that's where you'll put cash short and over.